a large, let's say you got $80,000 in savings, and it's being converted from a CD, and they say to you, well, we're not going to give you that robust 1.25%, but we're going to require that you pay us 0.25%. Well, of course you take your money out, and you buy something intelligent like a gold bar or a silver bar, and you tell the bank to go to hell. Now, this is a last gasp. I have kind of an off-colored saying to interpret the banks and their 0% rate. It's them trying to breathe through their assholes. I don't think it's going to turn out well. They might get a little indigestion. They might trigger a gold rally. They might trigger the bank runs. They're not thinking this through very well because they're desperate, without options, and their judgment has been impaired for years. I think the bail-in concept and the negative rates go hand in hand toward forcing people to reevaluate the benefits of having a bank account. Now, I'm not talking about a bank account for just handling your utility bills and drawing a little money out each week to buy food. No, I'm talking about a bank account to hold your savings. This is going to cause a run to remove people's savings, like big bank CDs. I've asked my father for years, the last 5 years, Dad, you've got a few $100,000 earning 1% in CDs. And he said, yeah, Jim, but it's safe. I don't come from a family of smart people financially and economically. I come from a family of people with very strong mental power. Depends on how they use it. My brother's smart in mathematics. My sister's smart in law. My dad's smart in literature. And none of them are smart in economics.
Now, moving from American banks, Richard from Brooklyn, New York, is wanting to know, how will Chinese banks be affected by the reset? Are they better off than the Western banks?
I've got to admit something, Elijah. I have made a point not to bother with analyzing the Chinese banks. You can call it lazy, but you could also just call it allocation of my time. I believe the Chinese are going to get through whatever it is they go through for the simple reason that they don't have any external debt. You take a look at the United States government and its $19 trillion worth of debt. Over half of it is foreign held. The Chinese have some debt. I don't know exactly what it is. They've got $3.5 trillion worth of foreign reserves. So how much trouble can they be in? They got wealthy families owning 30,000 or is it 100,000 tons of gold. How much trouble are they in? Anyone who thinks China's in trouble, I think, has swallowed hook, line, and sinker the nonsense from the U.S. financial press trying to distract your attention away from the U.S. financial distress and problems and quagmire and nightmare and financial collapse. I don't care about the Chinese banking system. Let them manage it. They have no external debt. Let them fix it. Why is it our concern? It's simple. It's our concern because we don't want to look at our own house of cards. Let them fix it. They'll be fine. They've got industry. They've got labor. We don't have industry. And I'm not sure we've got a lot of labor. When the time comes to hire Americans, I think we're going to hear a lot of complaints that they're too fat, they're too dumb, and they're lacking in training. So yeah, they're available, but the foreign industries that come in to set up shop in the United States are going to have to do a colossal amount of training for the Americans who didn't take much math in high school, who didn't take much physics and chemistry and science in high school. But there are plenty of Americans who are skilled and who are able and who are working. And we're finding out right now that they're just looking for too much money, and that's why a lot of foreigners are coming in for real cheap on their H-1 cards and, getting the jobs that the Americans are not getting. They're paying them less. Okay, it's very messy, but I'm not concerned about the Chinese banking system. They don't have any external debt. It's a point that American financial news networks and publications don't want to tell you. They don't have any external debt. Let's move on.
Now moving to Canada, Doug from West Coast Canada is wanting to know how Canada will be affected during this economic collapse. Specifically, will Canada experience the same kind of currency devaluation as the U.S.?
I think yes, but they're going to be in a much better position to bounce back and find a legitimate collateral backing. Canada has vast resources. They've got a lot of energy resources. They've got a lot of mineral resources. I really think in terms of two Canadas. I mean, let's just ignore the remote Canada, the Northwest Territories, Yukon Territory. Just leave that out of the argument for now. They're not very well populated. There's really Eastern Canada with the Maritimes, and then there's Western Canada with the prairies and all the energy fields and mineral fields. Eastern Canada is going to suffer pretty much the same fate as the United States. It's the industrialized area. It's the heavy banking center. They've got the same derivative problems that the U.S. banks have. They just don't have as many banks with such problems. Show me a large Canadian bank, look closely at it, and you'll probably find a lot of derivative rot all through their foundation. But then you have the West. The West has got a lot to offer the carpetbaggers, the foreigners with money in their pockets who are looking to invest when North America goes under. The big reason the U.S. leaders and the elites are delaying the reset is they know that it's going to be an instant slam to the economy, which is already stuck in a very deep recession, if not depression. It's going to be a very ugly 6 to 12 month period of adjustment because we're loaded down with a trade deficit. We're bereft with a lacking industrial base, and we've been living off this free credit card for a good 25, 30 years. We don't pay our bills. We just print something and hand it over to people who ship us stuff. That's not going to work in the next chapter. So Eastern Canada is going to go through a real nightmare. They're going to have a lot of credit problems. They're going to have some currency problems until they back their new Canadian dollar with something besides. Oh, I'm sorry. They need to back their new Canadian dollar with something like gold, but they forfeited all their gold. And the difference between the Canadians and the Americans is the Americans continue to lie about having gold, and the Canadians are honest enough to say that we don't have any. We just sold it all. They just sold the last $200 million worth of gold about 6 months ago. It made big headlines. The United States, you read, oh, no, we've got significant gold. It's in the West Point, it's in Fort Knox, and it's in deep storage facilities. Yeah, right. Like unmined mountain ore in Colorado, in Idaho. Yeah, in Utah, right. Nevada, right. No, the Western Canada, though, is going to be a very interesting story. It's already starting to turn in the story because it looks like the Vancouver property bubble has finally been burst. We're going to see maybe a slowdown in Chinese money coming in to Western Canada. All you need, there's a simple math formula I like to say. Insolvency plus illiquidity means bankruptcy. So as soon as you cut off the money, the flow, you'll see the industries and the big financial entities collapse that are currently insolvent and have been kept going from artificial means. It's going to be a real shockwave. I'd like to just take a quick aside here. What is the real value of quantitative easing and the monetary inflation for bond purchases done by the Fed and other central banks? What did they gain, and why do they call it stimulus? Well, first of all, they call it stimulus because it stimulates the financial sector and offers them a lot of free money. But what is the practical effect of infusing all that easy money into the financial sector? Just think of the U.S. banks, for instance. The U.S. big banks were all insolvent after the Lehman Brothers failure. So there's your insolvency. If they suffered illiquidity, they would have had to declare bank failures and bankruptcies. So how do you prevent the liquidity shortage for the insolvent banks? You do QE. QE had a motive, and I think it's the primary motive and the principal, paramount motive: prevent the Wall Street banks from going into bankruptcy. Buy their tainted, impaired bonds with fake money. Prevent the liquidity shock to an already insolvent institution. Prevent their bankruptcies. And they called it stimulus. Remember back 5 years ago, 4 years ago, there was every other month there was a new liquidity facility, and they started calling them the alphabet soup of liquidity facilities. Why is that? Because they wanted to prevent the liquidity problem to force a bankruptcy on the insolvent financial structure.
Yeah, and on that point, even a former Fed official, Andrew Huszar, admitted that QE was really just a backdoor Wall Street bailout. I mean, really, if you look at it, QE, a lot of it was just buying toxic assets from banks, mortgage-backed securities, and taking those off of banks' balance sheets and replacing them with cash. So just as you were saying, it was just giving banks liquidity. Moving on here, this viewer is wanting to know about, after the crash, what do you see happening to just markets? Do you see them working after the crash? And if so, what type do you think will exist?
Well, I get bothered by the question that refers to markets. Are they talking about the scrap plastic market? Is that what you mean? Or are you talking about the aluminum market? Is that what they mean? I'm being facetious here. Are they trying to say the stock market?
I would assume like the stock market and maybe precious metal markets as well, but I'm not 100% sure. But that's probably what they are referring to.
When they don't qualify, they usually mean the stock market. What's going to happen to the stock market? I don't know. How does 30 or 50% decline sound? Why would it not decline by the same amount that the new dollar is devalued? You think it'll go up by 30% to compensate and not have any change? That would be an assumption under a perfect world of continued QE, continued Federal Reserve, central bank interference with the markets. I think the central bank system is going to get its balls cut off. I think they're going to lose their right arms. They're going to lose their power altogether. And markets are going to have to find their own value. If anything is just in this world, after the reset, we're going to see the central banks stop their interference for rigging all the markets, whether it's gold or interest rates or stock values or bank stock values. They've rigged everything since the early 90s. After Black Monday of '87, the early 90s were significant because that's when we started to see the derivatives come in. It's a whirling dervish of moving nothingness that fakes people into believing that it has mass. And on top of this phony mass, we put the entire U.S. banking system. So our banking system is on a phony, mass-free foundation. And that's the essence of the fiat dollar. So I think the stock markets are going to be extremely vulnerable. Look, we're in a semi-depression right now. big companies' stocks are going up, not because their profits are booming, but mainly because they're getting free money from the Fed to buy their own stocks. So not only are we seeing stimulus of the U.S. Treasury through phony money, we're seeing stimulus of the S&P 500 with phony money, buying their stocks, but also free money lent to these companies to buy their own stock. They're not investing in their own companies. I mean, it's pretty clear in some of the financial quarterly statements made by these company officials. We're buying our own stock because we don't see a lot of opportunity for capital investment. Okay. I mean, I've read that from a dozen companies in the last several months.
Now, this next question gets back to the topic that we said we'd discuss at the beginning of the interview. Brody Tekin is wanting to know, what do you think of the Turkish banks and economic affairs before the supposed military coup and after it?
Well, I don't know specifically about the Turkish banks, but I do know about their economy. After shooting down the Russian plane back in November, it wrecked their tourism industry and their hotel industry and their agricultural industry and all their food provisions and their cost structure for various things. We saw a 25, 30% decline in the Turkish lira currency. So inflation across the board. I can't imagine their Turkish banks are doing very well. Usually the banking system is a direct reflection of the economic health of a country. So with an 80% decline in tourism, a 20-25% decline in their currency, I would think it's safe to say their banking system, not before and after the coup attempt, but before and after shooting down the Russian plane. The big event is not the coup for their economy. The big event is shooting down the Russian plane, because that interrupted their entire economy. They're not a really diverse economy. They're somewhat dependent on tourism and hotel industry. It's a big lifeline for their entire economy. I mean, can you tell me right now what are the three top industrial outputs of Turkey? I can't. I would imagine it's agriculture. I would think that hotel and tourism is one of their biggest industries. So let's now change the question. What's likely to happen to the Turkish economy and therefore the banking system there after resolution of this attempted coup? I think it's going to be nothing but growth. They're going to restart the Turkish Stream pipeline for connecting to Gazprom's gas, natural gas. They're going to resume the big energy facility, storage tanks, construction in Turkey for Russian provision and Eastern European usage, primarily Turkey. They're going to spark up the hotel industry over again. And they're already liberalizing the visas from Russia. I think we're going to see nothing but an economic boom after they resolve this coup, and it's not yet resolved because they're trying to stop second attempts by the U.S. government to bring about a coup, and they're trying to identify what's missing on the Incirlik Air Force Base, which is a NATO center. They're trying to locate the missing planes, and they're trying to locate the missing nuclear bomb. So it's not resolved yet. When it does get resolved, and that's not something the United States has going in its repertoire. We don't work to resolve. We work to destabilize, and if you need 80 examples, I can help you out.
Now, moving to this next question, Diane Harbauer is wanting to know, this is back on the topic of the Chinese yuan joining the SDR basket. She asks, After all abuses have come to light and China joins the SDR basket, can or will the USA lose their global reserve currency status? If so, what currency will be designated as the world reserve currency going forward?
Well, to begin with, when the IMF starts integrating more the Chinese RMB, that's not going to mean the U.S. dollar loses its reserve status. It's too widely used. You've got to interrupt its usage in order to interrupt its status. What it'll start is a movement from the euro bond to the RMB bond in banking systems across the world. I looked closely and had to look again because I made some errors, but I looked closely at the before and after on the ratios and weights for the IMF basket, and the dollar did not move much. What moved mostly was the euro. So of all the four major currencies, dollar, euro, pound, yen, it was mainly the euro that gave ground to the Chinese RMB, which means the global banks will diversify out of euro bonds and into Chinese government bonds to make the ratios work. Whenever they have a grant to some country and it's in SDR form, it must comply with those ratios, so that the governments that pitch in, they're going to have those funds ready. So the movement will be from euro to RMB primarily. If you're wondering how the U.S. dollar is going to lose its global reserve currency, it's not going to be from an IMF action that alters, say, a rebalancing of banking reserves. It's going to be from something much, much bigger. Because the dollar is very well rooted in trade, and the dollar is very well rooted in the banking systems. So it's not going to take a minor alteration like the IMF inviting another currency to disrupt the global reserve status. It's going to be a treaty that I'm hearing is in progress between Basel, Switzerland, the Bank for International Settlements, which represents the Western central banks. And on the other side of the table is the Chinese financial officials. Now, you can use your imagination. It'll be the central bank from China. It'll be the Chinese government finance ministry. And it probably would be some representatives for the ancient families, consider the white dragons with all their gold. Okay, so you have two parties there, the Chinese versus the Basel bankers. And the Basel bankers are in charge of Western banking systems. They make things like the Basel rules for insider trading, trading on their own bank accounts. Inside trading, not illegal, but inside trading off their treasury accounts. And they make rules like, say, for capital requirements. Those are called Basel II, Basel III rules. Okay, Basel makes rules for the Western banks' systems through their central bank. The big deal that's going on right now is a negotiation that would change international contracts between two parties that are written in the dollar, and that would change them through this international treaty and no longer have them paid out in the dollar but paid out in gold. And the two parties, Basel and China, are now trying to work out an agreement. And it's not easy because the Americans are telling them, delay, do it next month or next year. The amount that they're trying to fix for conversion of dollar payment to gold payment is a $5,000 gold price. That will unseat the dollar as global reserve currency. Because international contracts, like for oil, or say India providing an IT system for Saudi Arabia, or Bolivia selling a lot of metal to China in return for electronics and motorcycles and car parts. All those would be paid in gold. And what's the consequence immediately for a country with a trade deficit is that they would have to pay out in gold for the value and amount of their trade deficit, probably on a quarterly basis. Let's move on. That's my thoughts on the global currency reserve and how it will be lost and changed.
Hey everyone, thanks for watching. Click here to subscribe for free to be notified when the rest of this interview is released, or click over here to watch the full interview now.